in general, what's been on my mind is the price drop in gold and silver and people's overreaction to it. I think it was just that, an overreaction. You have massive short positions on both COMEX and the LBMA by the commercial banks, who had been getting blistered by the continual rise in the price of gold, really, and silver, really engineered by the countries in the global south who have been accumulating gold and silver hand over fist, amongst other commodities too, rare earths and base metals and even soft commodities. But we're seeing a drive to accumulate real things, which is a very dangerous position to be in for a commercial bank who's naked short. On COMEX, in the case of the silver market, short between 750 and 800 million ounces, about a whole year's worth of global mine production. Bottom line is our government has the biggest debt or is the biggest debtor in the history of the world. And it's yes, continuing to grow at a rapid pace, and it's an unstoppable pace. You can bring in Vivek and Elon and tell them to trim the fat. The truth of it is that you first have to address government spending, not just the waste in their bloated beast that they are. Payrolls, I think you have or employment numbers, I think you have pretty damn close to 800,000 government employees hired over the last two unemployment readings. I mean, that's just ridiculous. Private sector jobs are being shed. You have to address government spending first and foremost, and efforts to reduce spending will be meaningless unless there's the political will, which, ain't easy, to make the cuts in things like entitlements, welfare payments, national defense, veteran benefits, Medicare, Social Security. I mean, come on, you think they're going to do that? They've already said they won't. And if they don't do those things, then forget about, even if you had a balanced budget today, you have the massive amount of debt that we've already accumulated. The Congressional Budget Office says that by 2031, 100% of tax revenue goes just to pay the interest on the debt and mandatory entitlement spending like Medicare and Social Security. And so while the government should be able to, I would argue, keep this charade going longer than any other entity on the planet, because we have the printing press, just about all the empires going back throughout history start to struggle or start to break when they struggle to pay their interest costs. And that's where we're at right now. A moment of reckoning is on the horizon that would have huge implications based upon the fact that, think about military spending, it's discretional. So if the Congressional Budget Office is right, they're nonpartisan, and that it really is the case. How can we pretend to be the world's dominant superpower when 100% of military spending would have to be borrowed? You can't be this massive power when, you're printing money to buy your own debt to keep the ball moving, and it becomes a problem. Look, when companies go bankrupt, it's the shareholders that get their ass handed to them. But when governments go bankrupt, if you're holding the overpreponderance of your wealth in dollars, you will go broke. That's the important thing to understand, is that it's hard to believe that the U.S. government would ever go broke, right? But I mean, if this were your home, this was your personal finances, well, you are broke. You have $36 trillion debt. If you look at the United States government entity itself, it's got a almost $37 trillion debt. So we're broke, we're insolvent, we're well near 130% debt to GDP, a few percent away from that. There's never been a country that's come back from that in history without either hyperinflating or defaulting. So these are very challenging times, for sure. And I guess I would just simply say anyone that would hold a 10-year treasury has to have their head examined.
Gold and silver have long stood as symbols of stability and wealth. In a world increasingly characterized by fiscal uncertainty and reckless monetary policies, these metals shine brighter than ever. Andy Schectman's insights underscore why gold and silver are not merely commodities, but foundational pillars of a sound financial strategy. Let's delve into the intricacies of his observations and the broader implications they carry. One cannot overstate the gravity of the current fiscal situation. The U.S. government's debt trajectory is not just unsustainable, it's alarming. With national debt exceeding $36 trillion and debt to GDP ratios nearing 130%, the U.S. economy is navigating uncharted waters. Historically, no country has emerged from such levels of indebtedness without resorting to drastic measures, including hyperinflation or outright default. This is not hyperbole, it is the historical precedent. The Congressional Budget Office, CBO, paints an equally grim picture. According to its projections, by 2031, 100% of federal tax revenue will be consumed by mandatory entitlement programs and interest payments on the debt. This means discretionary spending, including defense, infrastructure, and education, would have to be entirely financed through borrowing. Such a scenario is not just economically precarious, but geopolitically untenable. How can a nation assert global dominance when it has to borrow every dollar it spends on defense? This fiscal predicament is not a sudden development. It is the culmination of decades of overspending, compounded by the financial crises of 2008 and 2020. Each crisis has been met with increasingly aggressive monetary interventions, quantitative easing, near-zero interest rates, and unprecedented fiscal stimulus. While these measures provided temporary relief, they have also laid the groundwork for the current crisis. The Federal Reserve's balance sheet has ballooned to unprecedented levels, and the notion of unlimited money printing has become disturbingly normalized. Andy Schectman frequently highlights the global shift in economic power, particularly the actions of nations in the global south. Countries like China, India, and Russia are accumulating gold at a record pace, signaling a strategic move away from the US dollar. This is not merely a hedge against currency devaluation, it is a calculated effort to reduce dependence on the dollar-dominated financial system. The implications are profound. As these nations stockpile gold, they are laying the foundation for a new monetary order, one that could challenge the dollar's status as the world's reserve currency. Silver, too, is gaining recognition on the global stage, but for slightly different reasons. While gold is primarily viewed as a monetary metal, silver's dual role as a monetary and industrial asset makes it uniquely positioned in today's economy. The push for renewable energy and advanced technologies has created an insatiable demand for silver. Solar panels, electric vehicles, and 5G technology are just a few sectors driving this demand. Yet despite its critical importance, silver remains undervalued relative to its industrial and monetary utility. The silver market's unique dynamics make it a particularly intriguing investment. The ongoing supply deficit, estimated at over 260 million ounces annually, is a ticking time bomb. When combined with the massive short positions held by Western banks, this creates a highly unstable market. The manipulation of silver prices through paper contracts on COMEX and the LBMA has artificially suppressed its value for years. However, as Schectman notes, such distortions cannot persist indefinitely. The laws of supply and demand will eventually assert themselves, and when they do, the price of silver is likely to experience a dramatic revaluation. Schectman also draws attention to the psychology of markets. Despite the strong fundamentals supporting gold and silver, investor sentiment remains muted. This is particularly evident in the mining sector. Historically, mining stocks have outperformed the metals they produce during bull markets. Yet, this has not been the case in recent years. Investors remain skeptical, perhaps burned by past volatility or distracted by the allure of speculative assets like cryptocurrencies. However, this skepticism presents an opportunity. As the market begins to recognize the true value of these metals, the potential for outsized gains in mining stocks becomes increasingly compelling. The global economic landscape is shifting, and gold and silver are at the heart of this transformation. The actions of central banks, the growing demand for industrial silver, and the unsustainable trajectory of fiat currencies all point to a brighter future for these metals. The key for investors is to act before the crowd. Once the masses recognize the value of gold and silver, the opportunity to buy at current prices will be gone. In conclusion, the case for gold and silver is not just compelling, it is imperative. These metals are not relics of the past, but essential tools for navigating the future. They offer a way to preserve wealth, hedge against risk, and participate in the transformative changes shaping the global economy. As Andy Schectman aptly puts it, gold and silver are not just investments. They are insurance policies against the uncertainties of our time.
in general, what's been on my mind is the price drop in gold and silver and people's overreaction to it. I think it was just that, an overreaction. You have massive short positions on both COMEX and the LBMA by the commercial banks, who have been getting blistered by the continual rise in the price of gold, really, and silver, really engineered by the countries in the global south who have been accumulating gold and silver hand over fist, amongst other commodities too, rare earths and base metals and even soft commodities. But we're seeing a drive to accumulate real things, which is a very dangerous position to be in for a commercial bank who's naked short. On COMEX, in the case of the silver market, short between 750 and 800 million ounces, about a whole year's worth of global mine production. In London, many times that, between 4 and 6 billion ounces short, naked short, paper short, for whatever reason. We've talked a lot about that, the military industrial complex and the need for silver. Those numbers are irrefutable, yet not calculated in the Silver Institute supply demand number. Another 260 or so million ounce shortfall between supply and demand for mine supply this year, according to the Silver Institute. And yet you have 8 Western banks shorting the prices the way that they have been. And I think what it really was, this decline. And first of all, let's say the decline was in silver futures. Let's just focus on silver for a moment, and gold futures. But because really it's the futures market, the tail wagging the dog, that controls the price. It should be the other way around. It should be the commodity controls the futures, not the paper futures controlling the commodities. And it's kind of backwards. At least it's mitigated, or it's migrated to that phenomenon, one that may not last forever. In fact, it shouldn't be, but it is. And when you have very, very well-heeled banks who have the ability to create a reality through paper contracts, either long or short, it creates some distortions. And those distortions were very real. And I think this big decline in the futures over the past couple weeks was a result of, or a belief, and I think the traders believe that the people believe that the Trump administration was going to halt the upward trajectory of the irresponsible fiscal policy and the massive federal spending addiction that we have, bringing out Vivek and Elon to trim the fat, and of course, choosing Bitcoin over gold and silver as the next key component to the sovereign reserves, all of which I think is irrational. But they used that irrational exuberance to push the ball down the hill. And what we saw, and that being the shorting, they shorted the price just to get it going in that environment.
The enduring allure of gold and silver lies in their dual role as safe havens and growth assets. Andy Schectman's analysis captures this perfectly, presenting these metals not just as commodities, but as cornerstones of financial security and opportunity. Let's expand on this perspective and delve even deeper into the transformative potential of these assets. Gold and silver have weathered centuries of economic turbulence, proving their metal as stores of value. In an era where fiat currencies are manipulated and debt spirals out of control, these metals remain steadfast. The current U.S. debt situation is a stark reminder of why gold and silver matter. With a debt exceeding $36 trillion and climbing, the U.S. is teetering on the edge of fiscal insolvency. History shows us that when nations reach unsustainable debt levels, they resort to drastic measures: hyperinflation, default, or a revaluation of assets like gold. None of these scenarios bode well for fiat currencies, but they underline the critical role gold and silver play in preserving wealth. Central banks around the world have taken note. In 2023 alone, global central banks purchased record amounts of gold, signaling a strategic pivot away from the US dollar. This trend isn't limited to gold. Silver, too, is gaining recognition. Nations like China, India, and Russia are quietly amassing silver reserves, acknowledging its dual utility as a monetary asset and an industrial commodity. This silent accumulation is setting the stage for a major revaluation of both metals, driven not by speculative bubbles, but by fundamental shifts in global economics. Schectman frequently highlights the manipulation in the silver market, particularly by Western banks. The scale of naked short positions in silver is staggering, with estimates ranging from 750 million to 800 million ounces on COMEX alone. When you factor in the London Bullion Market Association, LBMA, these numbers swell to several billion ounces. This manipulation artificially suppresses prices, creating a massive disconnect between paper and physical markets. But as Schectman notes, such distortions cannot last forever. The ongoing deficit in silver supply, estimated at over 260 million ounces annually, is unsustainable. When the tipping point comes, the ensuing price correction will be both dramatic and swift. Silver's industrial applications further bolster its case. As the world embraces renewable energy, electric vehicles, and advanced technologies, silver's role as a critical component in these sectors becomes undeniable. Solar panels alone account for a significant portion of global silver demand. With governments and corporations pushing for greener technologies, this demand is set to skyrocket. Yet, despite its strategic importance, silver remains undervalued. This paradox presents a golden, or should we say silver, opportunity for savvy investors. The narrative around gold is equally compelling. While silver often steals the limelight with its industrial story, gold's primary allure lies in its role as a monetary metal. Unlike fiat currencies, gold cannot be printed. It is immune to the whims of central banks and governments, making it the ultimate hedge against inflation and currency devaluation. Schectman's insights remind us that gold's recent rally is not just a market anomaly, but a response to deep-seated economic realities. As the dollar's dominance wanes, gold's relevance as a global reserve asset is only set to grow. One of the most intriguing aspects of Schectman's commentary is his advocacy for a monetary reset. The idea of resetting the global financial system by pegging currencies to gold or silver is not new, but it has gained renewed traction in recent years. The current system, built on debt and perpetual money printing, is inherently flawed. A return to sound money, anchored by gold or silver, could restore fiscal discipline and economic stability. While this may seem like a radical proposition, it is rooted in historical precedent. The Bretton Woods system, for instance, pegged the US dollar to gold, creating a stable global monetary framework. Reviving such a system, albeit with modern adjustments, could be the key to navigating the challenges ahead. For individual investors, the implications are clear. Gold and silver are not just assets, they are lifeboats in a sea of uncertainty. Whether through physical ownership, mining stocks, or ETFs, these metals offer a way to safeguard wealth and capitalize on the coming economic shifts. The current skepticism surrounding mining stocks, as Schectman points out, is a prime example of a market disconnect. Historically, mining stocks have outperformed the metals they produce during bull markets. The fact that this is not happening now indicates a unique opportunity for those willing to invest against the grain. The role of psychology in investing cannot be overstated. The current market sentiment around gold and silver is a mix of skepticism and apathy. Many investors remain fixated on short-term gains in speculative assets like Bitcoin, ignoring the long-term stability offered by precious metals. However, this sentiment is beginning to shift. As gold and silver prices continue to rise, the narrative is gradually changing. Greed is starting to replace fear, and this psychological shift will likely fuel a surge in demand, driving prices even higher. Bitcoin often enters the conversation as a modern alternative to gold. While it has garnered significant attention, Schectman rightly points out its limitations. Unlike gold, Bitcoin lacks intrinsic value and historical stability. Its reliance on technology and energy infrastructure makes it vulnerable in ways gold is not. Moreover, Bitcoin's price volatility undermines its utility as a store of value. While it may have a role in the financial ecosystem, it cannot replace the timeless appeal of gold. Schectman's emphasis on timing is particularly relevant. Investing in gold and silver is not about chasing short-term gains. It's about long-term wealth preservation. The fundamentals supporting these metals have never been stronger. The global debt crisis, monetary mismanagement, and geopolitical tensions all point to a brighter future for gold and silver. The key is to act before the crowd. Once the masses recognize the value of these metals, the opportunity to buy at current prices will disappear. The historical context adds another layer of depth to this narrative. From ancient civilizations to modern economies, gold and silver have been the bedrock of financial systems. Their enduring value transcends cultures and eras, underscoring their universality. In contrast, fiat currencies have come and gone, often leaving economic turmoil in their wake. The lessons of history are clear. Gold and silver are not relics of the past. They are essential tools for the future. The road ahead is fraught with challenges. The U.S. government's fiscal policies, the global shift in economic power, and the ongoing manipulation in precious metals markets all contribute to an uncertain landscape. But within this uncertainty lies opportunity. As Schectman often says, gold and silver are not just investments, they are insurance policies. They protect against the risks of inflation, currency devaluation, and systemic failure. In closing, the case for gold and silver is not just compelling, it's urgent. The fiscal and monetary policies of today will shape the economic realities of tomorrow. By investing in these timeless assets, you are not just preserving your wealth, you are securing your future. As the global financial system undergoes unprecedented changes, let gold and silver be your anchors in the storm. The time to act is now.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.